Welcome back to the channel, and thank you for joining me. I'm Algabot, your guide to the mechanics of automated trading systems for MetaTrader 5. Today we're taking a close, educational look at an expert advisor called Pivot Boundary Reclaim Scalp Hedge. It's a pure price action system that uses no traditional indicators at all. Instead, it builds classic floor trader pivot levels, watches for engulfing candle patterns, and pairs every reversal scalp with a resting stop order used as a hedge. By the end, you'll understand exactly how it reads the chart and manages its trades. Let's get started. So what exactly does this expert advisor do? At its heart, Pivot Boundary Reclaim Scalp Hedge is a failed breakout reversal system. It's built entirely from raw price bars. There are no moving averages, no oscillators, no volatility bands, nothing of that kind. Every decision comes from price structure alone. The first building block is the pivot ladder. Rather than reading a higher time frame, the strategy quietly aggregates the bars of your chosen time frame into full calendar days. When a day completes, it freezes that day's high, low, and close, and calculates the textbook floor trader pivot levels, a central pivot, 2 resistance levels above it, and 2 support levels below. These 5 levels stay fixed for the next session, so they don't repaint. The second building block is the entry pattern. Pivot lines are exactly where intraday breakouts tend to fail, so the strategy waits for price to pierce a level and then snap back with a confirming 2-bar engulfing candle. That combination, a pierced pivot plus an engulfing rejection, is what defines a setup. The third building block is the hedge. The moment the strategy places its reversal scalp, it also rests an opposite stop order just beyond the rejected extreme, so that a genuine breakout is caught rather than simply suffered. This approach is naturally suited to liquid foreign exchange majors such as Eurist or BPUST on lower time frames like the 5-minute or 15-minute chart, where pivot false breakout scalping has its traditional home. It's designed for traders who are curious about structured, rules-based price action and who want to study how reversal logic and risk management fit together. Remember, this is educational information only, not financial advice. And like any approach to the markets, it carries real risk, including the risk of loss. Let's walk through the mechanics step by step. Everything structural happens once per newly closed bar, so the strategy is patient and never acts on a half-formed candle. First, the pivot ladder must exist. As each day's bars are aggregated and the day completes, the strategy computes the 5 levels and also records that day's range, its high minus its low. That range becomes the measuring stick for every buffer and offset, which lets the same code adapt to any symbol or time frame without hard-coded point sizes. Next comes the entry. For a long setup, the strategy looks for price that has dipped below one of the support pivots and then closes a bullish engulfing candle that fully engulfs the prior bar and reclaims the level. When that happens, it buys at the market. The take profit is placed at the next pivot up, a clean, structural pivot-to-pivot scalp. The stop-loss sits just beyond the rejected low, padded by a buffer that is a fraction of the prior day's range, set by the stop buffer fraction parameter. The short setup is the mirror image. Price pokes above a resistance pivot, then closes a bearish engulfing candle back below it. The strategy sells at the market, targets the next pivot down for take profit, and places its stop just beyond the rejected high. A minimum reward-to-risk filter, defaulting to 1-to-1, rejects any setup that's too cramped to be worthwhile. Now the considered part, the hedge. The instant a scalp is taken, an opposite stop order is rested at the pierced extreme, a buy stop above a short, or a sell stop below a long. Crucially, it's placed closer than the scalp's own stop, so a real breakout fills the hedge first. The scalp's wider stop then bows out, and the hedge rides the genuine move toward the next outer pivot. Finally, basket management oversees everything. While any exposure is open, the strategy watches the combined floating profit and loss on every tick. It banks the whole basket at the BasketTpMoney level and flattens everything at the basket stop-loss money level. That combined exit is what harvests a recovered whipsaw and caps the strategy's single hardest scenario, a strong one-way trend after the hedge has filled. Let's look at the actual MetaQuotes language code, just as it appears in MetaEditor. At the top are the input parameters you can adjust. Stop buffer fraction controls how far beyond the rejected extreme the stop sits. Hedge offset fraction sets how far inside that stop the hedge rests. Minimum reward risk is the smallest acceptable reward-to-risk ratio, defaulting to 1. BasketTpMoney and BasketSlMoney govern the combined exit. And there's also a maximum spread filter, a lot size, and a magic number. Below that you can see the heart of the signal logic. The two Boolean lines detect the engulfing pattern. Bear engulf is true when the prior bar is bullish and the current bar is a larger bearish body that swallows it, and bull engulf is the exact reverse. On the short side, once a bearish engulfing rejects a pierced resistance pivot, the target is set to the next pivot down. The scalp stop is placed just beyond the high, and the order goes out through trade.sell, carrying that stop and target. On the long side, a bullish engulfing reclaims a pierced support pivot. Here the target is the next pivot up, the stop sits just beyond the low, and the trade is sent with trade.buy. Notice how both sides are perfect mirror images, same structure, opposite direction, and how the stop loss and take profit are passed straight into the order the moment it's placed. That's what keeps the logic transparent and fully rules-based. Every exit is defined the instant the trade is opened. Now let's bring it all together on a chart and watch the strategy work through a long trade and then a short trade in sequence. On screen, you can see our pivot ladder drawn as horizontal dashed lines. Down below sits support pivot S1 at 1.0840. In the middle is the central pivot at 1.0860. And up above is resistance pivot R1 at 1.0890. These levels were frozen from yesterday's range and stay fixed all session. Watch the opening candles. Price is drifting gently downward, slipping away from the central pivot and heading toward support. The second and third candles push lower, and notice how that third candle actually dips its low below support pivot S1. This is the pierce the strategy is waiting for. Price is poked through support, and a breakout to the downside looks like it might be starting. But then the next candle tells a different story. It opens at the bottom, near the prior candle's close, and then buyers take over and drive it all the way up, closing above the open of that previous bar. That's a textbook bullish engulfing candle, and because it closes back above support pivot S1, the failed breakout is confirmed. This is where the buy entry marker appears. The strategy buys the rejection, placing its stop just below the freshly rejected low and setting its take profit at the next pivot up, the central pivot at 1.0860. From there, follow price upward. The candle after entry pushes higher with conviction, and as it reaches the central pivot at 1.0860, the take profit marker is reached. That's a clean pivot to pivot scalp. Price was faded right off support and carried to the next structural level, exactly as the logic intends. Now price doesn't stop there. It keeps climbing, candle after candle, leaving the central pivot behind and pressing up toward resistance. Watch as it approaches resistance pivot R1 at 1.0890. The candle that reaches it actually pierces above the level, its high pushing through resistance, and once again, a breakout looks like it could be underway. Then comes the rejection. The very next candle opens above resistance, but sellers immediately take control. It closes as a strong bearish body that fully engulfs the prior candle and settles back below resistance pivot R1. That's a bearish engulfing rejection of a pierced resistance pivot, and this is where the sell entry marker appears. The strategy sells the rejection, placing its stop just above the rejected high and setting its take profit at the next pivot down. Once again, the central pivot at 1.0860. Follow price lower from there. The candles roll over and decline, and as price eases back down to the central pivot at 1.0860, the second take profit marker is reached. The short scalp has done its job, fading price off resistance and returning it to the central level. Notice the symmetry in what we just watched. A long trade and a short trade, both built from precisely the same idea. A pierced pivot, a failed breakout, and an engulfing candle that confirms the snapback, just mirrored in direction. And remember, behind each of these entries the strategy had also rested its hedge stop just beyond the rejected extreme. In our two examples the breakouts failed, so those hedges were never needed and were quietly canceled once each trade closed. But had either breakout been real, the hedge would have filled first and ridden that genuine move toward the next outer pivot. That blend of a structural scalp and a protective hedge is the whole character of this strategy. Of course, not every setup plays out this cleanly, and losses are a normal part of trading any approach. And that brings us to the end of our breakdown. Today we explored the pivot boundary reclaimed scalp hedge expert advisor, how it builds floor trader pivot levels from raw price, how it fades failed breakouts using engulfing candles, how it rests a hedge stop to handle a real breakout, and how its basket management oversees every open trade. I hope this gave you a clearer picture of how structured, rules-based price action can be assembled into a complete system. Everything here is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. If you found this useful, please like the video, leave a comment with the strategy you'd like analyzed next, and subscribe so you don't miss what's coming. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.